Happy Wednesday, Focus fam. It is Focus Chan. Hope you guys are doing well, kicking butt, taking names, all that fun stuff. As always, guys, want to dive in and share my thoughts on this beautiful volatile market and hopefully give you a little bit more clarity for the rest of the week. So let's get right to work here, my friends. I appreciate your time. I won't waste it. Let's get to it. First things first, as always, is the economic calendar. Got to be aware of the catalyst and the events that could move mama market. So we just take a look here, guys. It is a pretty light week. We did get through a pretty packed week last week with, I think we had double Powell, all that fun stuff. This week, guys, is really all about Thursday. We do have our core CPI, which is our consumer price index. Obviously, very important times, guys, to understand this information. This is essentially a big gauge of inflation. Are consumers paying more, right? And obviously, guys, off the top of your head, the answer is yes. Whether it be gas, whether it be groceries, we're all starting to feel the inflation, but we want to actually know the numbers, how's it adding up, et cetera, et cetera. So we're going to get this an hour before the bell on Thursday, and this will be our pretty much only catalyst of the week, besides the obvious news going on with Russia and Ukraine. Can always see blips here left and right, but the only planned thing is our core CPI. So as always, guys, this could be a non-event. It could absolutely explode us. It could absolutely implode us. Key is to be aware, read the information, and know what's coming. So other than that, we can get right to charts. So last week, guys, was kind of our stalemate. We had the big drop in the market, and then we had the big pop, and then we just sat sideways, pretty much forming a lowercase h, right? We peaked at the highs, could not get through 4,400, and then we started to roll over here to end the week. And, this week we had a really nice flush. We broke some very big ranges that I've been discussing here. We pretty much got, not down to 4,100, but pretty close. And today is our first day where we're popping right back. So obviously, guys, we're continuing to see a whipsaw market. We can go up and down. It can be from headlines. It can be just because the market wants to do what it wants to do. But always want to try to add a little clarity here. And as always, want to keep the map pretty straightforward. Last week, I was talking about if we start to break through 4260, we can start to see that 4212 and under 4212 really can start to get iffy. Well, we broke through 4212, had a very bloody day, and then we pretty much just chopped around here on Tuesday, right? We ripped to the highs, we ripped back to the lows, and then overnight heading into today's session, we just have these random climbs, super strong. So the market guys did a good job of holding at very pivotal levels, and it's done a very good job also getting back above very pivotal levels. So for the rest of the week, really want to focus on, 3 critical ranges here. Let me grab my trusty pen and let's go talk about it. So obviously, guys, when we are down and, popping, it's always a conversation of pushing back towards liquidity. And mainly for me, liquidity is always the 21 exponential on the daily, the weekly, and then using point of control. So if we look at these charts, guys, if you know my color coding by now, really want to dial in on 4,300. We have a POC level, which is, I believe, exactly POC right now at 4306 here for ES. It also sat above at 4322 for a little bit. So 2 very important ranges right above us. Through that, my friends, currently at 4342 is the reversion to the mean, right? We're at the 21 above. So this entire box, call it 4,300 up to 4,340-ish, that's our liquidity. And that is where we should expect the market to push back towards if we're going to see any type of upside. What happens from here? I don't know. I will personally be looking to short at liquidity, but let's focus on getting there first, right? It's okay to play dips, guys. We got to understand where the dips can stop and be ready to change. So big level, guys, is at 4260. If we continue to kind of hold 4260, in my opinion, it makes sense that we go and see this liquidity, where if we do start to roll back under 4260, then it's most likely just going to be a very big chop fest, unless obviously we get some news here. But if we break 4260, I want to pay attention to a drop back down towards that 4212. We did a good job today of, hitting 4260 and not getting bullied, right? Like yesterday, we hit it and got bullied. We hit it here and didn't. And so we finally got to break through it, and we haven't even retested it. So just use these levels, guys, as a line in the sand. Goes without saying anything is possible here. But if we continue to see 4260 holding. Would like to see that, liquidity pocket get reached, whether it be 4300, 22, or even back to the mean. This is the vicinity that we could expect. We're again back below 4260. At most guys looking for this zone at first. Once we're under there, well, then we can focus on revisiting the lows here. But really one step at a time. Could honestly go either way. We'll see if CPI adds any type of fuel to up or down. That's really what we're working with here, my friends. Last thing I'll note, guys, is, when the market does start to pop, just be mindful of short covering. We really can see short squeezes, some covering, and that can lead to pretty aggressive moves here, right? Like 3 days straight up. Doesn't mean we're back to a bull market, but you better be, out of the way here and not be shorting. So again, not saying this rips for 3 days straight, but if we do keep holding 4260, we are in a little bit of short squeeze territory. And we could see pretty big rips up towards the top of this range. Where again, my friends, if we roll right back underneath it, it's going to be a while, but we got to break 4100 for any type of, new territory to be reached. So as always, guys, keep it tight. Make sure you're sizing appropriately. This isn't the environment to get, super aggressive because it's very, unpredictable here. But it is a great environment, guys, for day trading, scalping, getting your piece, buying low, shorting high. That's the name of the game here. Let's take a look, guys, at VIX. I want to cover some very important levels. And the first thing I want to talk about, guys, is this 37.5. It's a level that I've been talking about for a while. I always kind of share these same similar levels on VIX. And as always, guys, we want to pay attention to when we get to those key levels. So this 37.5 has pretty much been, where we top out most of the time. If we go back and look here to just add a few years to this chart, if we look, guys, we were only really above 37 during the heat of COVID. 2020 started here, and obviously VIX was way above. Massive panic that I don't necessarily hope we see again, just for the sake of the world. But you guys can see just, narrowing in here after 2020 and after we cooled off of COVID, getting through 37 has really been a very hard journey. We stopped right here, we got through it for a little bit, but then completely dumped. We hit it here, we hit it, close here, topped out, topped out, topped out. So this is very important, guys, because even when the market is dumping, even when the sentiment is bad, when we get to major key levels in the market, and VIX gets to major key levels as well, no matter how you feel about things, it might reverse, right? ES is going higher today, whether you, agree with it or not. VIX topped out where it should. ES kind of held the range as it should, and we have to be open-minded. So I want to pay very close attention, guys, to these VIX levels as always. We had that stop last time at 37.5 with that very large drop, aka pop in the market. Again, that pop got sold, but you don't want to get short here, guys. You want to know when to reverse. So we've taken that slow journey all the way back to 37, and now we're getting rejected again, and the market's working its way higher. So pay close attention, guys, to these next key levels, right? If we reject 37, the next key level is 32. And here we are, holding it nicely. So if VIX holds 32 and works its way back towards 37-ish, then the market will be rolling right back over, probably breaking that 4260 and heading back into that chop territory. Maybe we get even, friskier, but we'll have to break 37.5 for the market to try and take out that 4100 range. Hope I'm making sense here, guys. And then in order for the market to keep popping, we need to see 32 to 29, right? But just like here, guys, just like here, just right here, that might be where you now switch to short again. So as always, guys, I want to try to time the market using inflection points, using multiple internals, and this is really how the game is played. So pay attention to VIX, pay attention to Mama Market, and we'll see what we do the rest of the week. But 32 to 29 is bullish for the market. 32 to 37 is bearish. That being said, guys, keeping the focus tight. As always, just want to share two setups with you. One of them is NVIDIA. So not only is NVIDIA at major key levels, but the market is at major key levels. And as always, guys, we want to watch these things in tandem. Where for NVIDIA this week, reached a major key level of 208. We exploded off of it last time. We exploded off it again, and we're bottoming here yet again this week. So obviously, guys, like most things, the path for NVIDIA and the market is pushing back to liquidity. Or if we look here at NVIDIA, we got point of control up near 236. We got the daily mean up here near 237. We also have the 200-day simple up here near 235-ish. So for NVIDIA, they kiss that range, guys. And again, whether you agree with it or not, it's a huge inflection point and cause a beautiful pop here. We got to be open-minded to playing both. But when we get back to these ranges, it could be the place to roll right back over. So I want to pay very close attention, guys, to NVIDIA, because this is a range where they could absolutely fail and roll right back over towards 220 for a nice short. However, if it just pulls back and kind of finds its feet, then it could continue this pop, guys, up towards 240. I don't really expect it to, get super, super bullish here, right, guys? Just looking to play these pops back to liquidity and then see what happens. If eventually we reclaim and hold, well, then I'll play NVIDIA back up. But really, mission here, my friends, is getting towards the mean, and then we see what happens from there. So any little dip buy could be viable for that journey up towards 240. But again, guys, if we reach this range and start to top out, could roll right back over and I'll be ready to short off of it. So see what NVIDIA has to offer here, but keeping it simple, guys, looking to play that path up to liquidity and then potentially right back down. Let's see. I set up here, guys, a shop. As always, my favorite this year, been loving shop, and it's at some very major key levels. If we take a look at this chart, guys, they've just been bleeding, and bleeding. They took out a massive key zone here of 585 to 574. That caused an immediate drop pretty much straight to 500. If we take a look, guys, right, volume always tells a great story. Last time we had huge abnormal volume, they bought up shop. Until then, they've been selling, and today was the only day that they rushed in and open, and they bought this thing right back up. If you guys are familiar with how I use the cloud, whether you've taken courses or anything like that, today was the first day it reversed back on the other side of the 30-minute. So that slowly starts the reversal here for Shopify. Let's see how long it lasts. Big level, guys, I've been focusing on for today was getting back towards 600, which was a point of control level. Very, very important. And it's very close here. So next step, guys, is going to be starting to work back towards the mean. One thing to note on shop, why I'm still very bearish, is it hasn't really reverted to the mean once this entire time. You guys, ever since it rolled over from 1400, it actually hasn't kissed the 21 exponential once. It's pretty shocking, but we want to follow that pattern. So again, guys, not a big bull here. However, it is slowly starting to pop, so I will play it long. One very big range I want to focus on through 600 if it gets there is back up towards this 4-hour cloud, which whether it's, tomorrow or Friday, that's back up, guys, towards 640, right? Kind of back up towards that prior flush point. And again, if we look at the mean here, that's also, that's near 700. That's actually really far. Not expecting that. Really, guys, at most 650-ish. So first shop, guys, as always, ready for both scenarios. Been shorting this thing every day for a while, and I'm okay switching here. So we'll see what happens. But if they keep holding 574, I think they can continue to work their way towards 600. And then again, guys, potentially through it here. And at most, I'm really focused on 640-ish. Where if it does continue, guys, to reject 600 and cannot get through this range, if it gets back under 574 and stays there, I think it can roll right back to 555. If it doesn't break that, it's got a good chance of just kind of basing here. Or if it does break 555, it could easily roll right back over to 530. But you can see from today's price action, all right, if we zoom in, we pretty much were right near that 555 the day prior. We gapped under it on Tuesday, rejected it, and dumped. Nice sell-off. And then this morning and today, ripped through it, never retested it, kissed the zone, and then closed at the top. So shop bulls, they had a day. It's been their first day in a while. Maybe it continues, but I'm really going to be open-minded on both. Shorting it at 600 and then also playing it up towards 630 to 640. Hope that helps, my friends. But that will be my focus. As always, guys, watching the indexes, open-minded on playing SPX, etc. But as always, I keep it tight. Don't need to focus on much. We just need to get our piece, one good trade at a time. So cheers, guys. I appreciate the support. As always, make sure you like, comment, subscribe, all that fun stuff that keeps us going here. But cheers, guys. Go kick butt, and I'll talk to you next video.
Hey, Focus Chain here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.